the SPX has, in the news, it always is making new all-time highs. I think it's made hundreds of all-time highs, in the last couple of years, all the way up here. And the reason the SPX does this, guys, and the reason that it's like, well, is everything just gaining value, is because the SPX and companies in America aren't actually going up in value. It's just the price rising. And there's a difference between price and value. When you look at inflation adjusted, what you're really seeing here is the actual value, because what you're doing is you're taking the M2 money stock supply, the amount of M2 money supply in the economy, and then you're dividing it by the asset itself. And what you can see, guys, is that the SPX, the value of the SPX is not any higher right now, or it's lower than the dot-com bubble. This was the 87 crash, dot-com bubble, this was the 2008 recession, and this was COVID. So you have these spikes down, and value actually went down in these iterations. And the point I'm trying to make, guys, is that the SPX is not above the all-time high of the dot-com bubble today. So the value is less still. The price, guys, obviously is massively higher. It's been going up for many, many years, and it has never stopped. Decades, actually. It's been rallying. And you would say, well, what's going on here? Like, surely the value is going up. The dot-com bubble was here. Okay, that's the dot-com bubble. That high. The price is here on the SPX, but the value has not gone up. The value of stocks is less here than it was here. The value. So understand that. Even though the price is going up, less valuable. Even though the price is here, it's less valuable here. And a lot of guys are going to be scratching their head saying that can't be true. This is proven by inflation-adjusted charts. So the reason I think that there might be some short-term volatility to the downside on SPX is because we are potentially going to see some sort of pullback on the inflation-adjusted. It wouldn't actually surprise me to see it come back to here. Something like that, back in, and then continue up. But that would obviously mean the price would fall. It would probably come down to there. And you'd find a high. Sorry, you'd find support on the prior high and then continue up. And the reason that inflation adjusted is so important, guys, is because the only reason the SPX is rallying in price so much is because there's been an exponential frenzy of new US dollars being printed into the circulating supply. So what that does is because there's so many more dollars in the economy bidding on roughly the same amount of stocks and shares, it just means that there's been a dilution event. So when you have an economy, for instance, this make it very simple. If you have $1 million in the economy and it costs $10 for a loaf of bread, if you suddenly tomorrow make it so there's $2 million in the economy, that means that the purchasing power of those dollars has been halved because your $1, right, which you had 1 million, now there's a whole load of extra dollars out there and there's $2 million then bidding on the bread. That means that bread is like you said at the beginning, it was $10. It needs to go to $20 for the bread because the dollars have been devalued. So it means that the bread goes to 20. It doesn't mean that the value of the bread went up. The bread's still the bread. It just means the price went up to equate for the new dollars created. So that's exactly what you're seeing here. There's no increase in value here, guys, at all. It's just the price rallying because there's more dollars in circulating supply, and the inflation adjusted charts are showing that. If we do see a double top formation on the inflation adjusted, we come to here, we come up into there, make a lower high, then yeah, we could be looking at the SPX going into a long-term bear market and potentially something like this coming in, and then it comes into a longer-term bear market, very similar to what gold did over the last, what you could call it this whole decade here, but even here and here, two big sloping sideways markets resulting in an upside move. And gold's very similar to the SPX, guys. The price of gold rallies when there's more dollars in circulating supply,